Lenders 20 questions on pass-throughs and K1s. Video 17. Passive versus non-passive income and loss. What is it and what difference does it make? Well, first context. When you look at the 1040 Schedule E, page 2, and you see the list of the LLCs, partnerships, and S corporations, they could be listed on the left side, which is passive, or on the right side, which is non-passive. So, what difference does it make? If it is passive, it's more like an investor. This borrower, this taxpayer, is not actively involved in this activity. So if I'm looking for someone who's likely to guarantee loans, probably not in that list. If I'm looking for someone who has to put a bunch more money in or has liability for what's going on in the business, less likely to be on the passive side. Now the non-passive side is where you find active businesses, meaning where the borrower, the taxpayer, is active in that business. And if a partnership, that's a general partnership. General partners, we talk about in the video on risk exposure, riskiest situation we can have. So active businesses, more likely to be higher percentage owners, more likely to have guaranteed debt. So if you did have page upon page upon page of K1, I would really zero in on all of the things on the non-passive side. Now, how do you decide whether you need the full return or not? That's more about percentage ownership. So they could still be on the non-passive side, but only say a 5% owner. You might still just go for the K1. If they're on the non-passive side though, and they're above your threshold, 25%, 10%, 15, 20, whatever your guidelines are, you may need to get the full 1065 or the full 1120S and see what cash flow is available from the business to your owner. If you enjoyed this information and you would like to receive all 20 free videos of the top questions lenders ask and should ask about business, personal, and global cash flow from pass-through entities, along with a copy of my tax return analysis quick reference guide, visit the URL on your screen.